Welcome back to Iraqi Dinar Hub, your trusted source for deep dive coverage on IQD, VND, and ZWL developments. A seismic shift is underway in the global financial landscape, and it's beginning to manifest in ways that seasoned observers cannot ignore. As of July 8, 2025, verified intel from Tier 1 banking networks confirms the onset of synchronized back-end adjustments tied specifically to exotic currencies. These aren't just whispers from fringe circles. They're founded on transactional metadata, verified central bank memos, and insider briefings circulating through elite private banking spheres. For those who've tracked these currencies for years, the signals are louder than ever. The revaluation scenario may be playing out in real time. The ongoing activity, while subtle to the public eye, suggests an inflection point has been reached. Rate test protocols, liquidity triggers, and system synchronization flags are all flashing green. For holders of IQD, VND, or ZWL, the question has shifted from if to how soon. This may be the threshold moment between theory and reality. Unusual movement across the world's largest banking platforms is confirming what insiders have suspected for weeks. Wells Fargo, HSBC, and other Tier 1 institutions have reportedly launched synchronized foreign exchange recalibration protocols. According to leaked memos and internal FX desk advisories, new rate thresholds are being configured in core systems. These advisories are not common practice there, issued only when a major foreign currency rate shift is imminent. Advanced platforms like XME and SWIFT, essential for handling international liquidity and interbank communication, are already running live test flags for both the IQD and VND. Though invisible to retail traders, these tests are foundational to back-end operations. In parallel, U.S. Treasury documents dated July 6 confirm that both currencies have entered the transitional monitoring phase, a prelude to rate launch used historically to align core banking systems behind the scenes. The silent coordination taking place across institutional platforms signals that a change of serious magnitude is now in motion. Below the surface of retail platforms lies a trove of institutional data, painting a much more volatile picture. Foreign exchange placeholders, often invisible to the public, now show rate fluctuations for the Iraqi dinar between $0, 38 and $1, 17 depending on tranche size. For the Vietnamese Dong, internal bands stretch from $0.0047 to as high as $0.12. These rates aren't yet active, but the presence of such wide markers suggests prepositioning in anticipation of a recalibrated Forex landscape. Meanwhile, major derivatives...
This audio was created with Podcastle.ai.
Forex landscape. Meanwhile, major derivatives markets like the Chicago Mercantile Exchange have seen a 73% surge in contracts tied to the VND since June 30th. This points to speculative hedging by institutional players expecting rate movement. The global swap market has also recorded anomalous activity around IQD pairings, indicating financial desks are preparing for volatility. When such activity spikes in tandem across uncorrelated markets, it usually signifies an organized effort among institutions to front-run a coming change. Monetary analysts from top-tier institutions are now publicly voicing their observations. Dr. Elaine Masters, a former IMF regional advisor, stated in a press release that the current level of FX system flagging and liquidity realignment constitutes AE, pre-harmonization signal, language rarely used outside confidential policy circles. She emphasized that these behind-the-scenes technical alignments typically precede official revaluation announcements. Her analysis is echoed by Jeffrey Carlo of Morgangate Financial, who noted that liquidity freeze protocols being enacted suggest either a hard currency revaluation or coordinated FX/IS realignment. These aren't casual remarks. They're grounded in observable activity taking place within regulated financial systems. Both experts independently concluded that current conditions mirror those of prior historical rate shift, making the present convergence more than coincidental. It's likely the beginning of a monetary recalibration process on a global scale. While attention focuses largely on Iraq and Vietnam, smart money is beginning to monitor movements out of Zimbabwe, The Reserve Bank of Zimbabwe (RBZ) has been quietly laying groundwork for currency rehabilitation. In the last 6 months, RBZ has engaged with institutions like the IMF and African Development Bank, using terms such as regional stabilization mechanics, a known euphemism for upcoming key currency adjustment. Simultaneously, Zimbabwe has increased issuance of ZIM bonds backed by national gold reserves, a classic move to inject credibility and asset backing into a historically unstable currency. Even more telling, select US-based Tier 2 financial firms now have access to a closed exchange system run by the RBZ. Internal tests of a gold-backed digital ZWL currency are also underway. While Zimbabwe's path is slower and less transparent, their inclusion in this revaluation window is increasingly likely. Their activity suggests not just hope, but strategic intent to join the broader recalibration. Timing remains the ultimate variable, and right now all the signs are aligning. Iraq's central bank has just completed key international compliance steps, including full SWIFT integration and Basel IV capitalization requirements. These actions were non-negotiable preconditions for re-entry into the global financial grid. Meanwhile, Vietnam's export-heavy economy has reached a monetary inflection point. With a record trade surplus, pressure is mounting to revalue the dong, to correct trade distortions, and stabilize macroeconomic balance. Concurrently, the US Treasury has entered its mid-year recalibration phase, a time traditionally used to enact complex monetary operations like foreign aid flows and debt servicing adjustments. These converging timelines across Iraq, Vietnam, Zimbabwe, and the United States suggest a rare geopolitical harmony, a convergence likely seen as a limited-time opportunity by central banks. As history has shown, such alignments are rare and highly actionable. At the center of this unfolding event is a lesser-known but critical phenomenon, the 72-hour rate integrity window. This operational phase begins after back-end systems finalize new currency rates, but before they become available to the public. During this time, Tier 1 clients and pre-cleared currency holders are granted limited access to locked-in rates, early redemption offers, and appointment scheduling. These activities happen under strict NDA protocols and require verified documentation. The purpose is to stabilize the rate environment and confirm system functionality before full-scale public exposure. During this period, rate fluctuations are suppressed to prevent speculative volatility. Financial institutions often begin scheduling appointments for early exchanges only, for vetted clients with valid proof of currency origin. Missing this window won't shut out investors entirely, but it will exclude them from premium rate tiers and negotiated contracts, which are often exclusive to early redemption participants. Fresh intel from trusted financial hubs across the US and abroad is confirming that early redemption processes are no longer theoretical, they're actively happening. Private wealth clients in Florida, Texas, Michigan, and Nevada have reportedly received what are being termed rate match alerts. These notices offer eligible currency holders the opportunity to lock in a predetermined exchange rate ahead of public Forex updates. Confirmed appointments have occurred at JP Morgan, Bank of America, and Citi private wealth desks. Regional Wells Fargo offices have also processed early exchanges for qualified clients. Internationally, HSBC in London and Dubai has contacted select clients for currency account conversions, which allow for exchange processing through treasury-level desks. All transactions have been handled quietly, utilizing encrypted internal messaging platforms and NDA agreements. What began as isolated reports in June has become a steady stream of confirmed activity in just the past 48 hours, marking the strongest evidence yet that the revaluation process has entered execution phase. For those who've waited patiently and planned carefully, now is the time to act with discipline. Step 1 is to ensure your holdings of verifiable banks are requesting detailed proof of origin, such as dealer receipts or notarized statements. Without that documentation, redemption access may be denied. Step 2 is affiliation, establishing ties with institutions known to facilitate exotic exchanges: JP Morgan, HSBC, Wells Fargo, Citi, and Bank of America. If you haven't already, inquire about foreign currency services or establish a private client profile. Step 3 is intelligence track systems like Bloomberg terminals or back-end indicators like Forex Live, which often reflect early placeholder rates. Finally, prepare all identification documents. Government ID, proof of purchase, and secure account credentials are critical. The process ahead isn't about hype, it's about methodical execution. Move quickly, but with precision. Your preparedness may determine whether you benefit from this once-in-a-lifetime window or miss it altogether. As momentum builds, it's vital to remain vigilant. The surge in revaluation chatter has unfortunately attracted a wave of scams designed to exploit unsuspecting holders. One major red flag is unsolicited emails offering early access to exchange rates in return for upfront payments, often through wire transfers, crypto, or gift cards. These are textbook scam. No real bank will ask for funds in advance to lock a rate. Another rising threat are Telegram or WhatsApp groups claiming to have direct access to institutions like the CBI or IMF. These claims are not only unverifiable, they're dangerous. They often lead to identity theft and financial fraud. Additionally, steer clear of social media personalities promising fixed rates or exchange dates without providing evidence. These influencers often operate on clickbait models and have no institutional credibility. Stick with verified communication from your bank or platforms with a proven reputation. When in doubt, speak to a licensed financial advisor. The stakes are too high for guesswork or shortcuts. Financial experts now believe we are on the verge of a systemic transformation, one that redefines how exotic currencies are handled globally. The outdated one-rate-fits-all Forex model is giving way to multi-tiered systems based on asset backing and holder verification. For the Iraqi Dinar, oil-backed rate structures are under consideration. The ZWL is already piloting gold-pegged digital currencies. Those with verified histories proof of long-term holdings and documented acquisition may soon be offered premium contract-level rates unavailable to the general public. These contracts will be distributed through authorized redemption channels under private agreements. In the background, decentralized platforms are being developed to allow redemptions through blockchain-secured systems, ensuring liquidity and traceability. Meanwhile, global institutions like the IMF are laying groundwork for sovereign settlement frameworks to stabilize exchange without disrupting economies. By Q4 2025, the world could see the full institutional rollout of this new model. The question is, will you be ready before the curtain rises? This is not a hypothetical. It's a verified scenario unfolding in real time. From interbank memos to system test flags, from private redemption appointments to central bank liquidity reallocations, every piece of the puzzle is converging. The revaluation process, long theorized and often dismissed, is now visibly operational. But windows like this don't stay open long. Those who've prepared, documented, and connected with the right financial channels are best positioned to benefit. But success now hinges on awareness and execution, not blind hope. Make sure your records are intact, your financial ties are solid, and your decisions are made with clarity and caution. We are entering a new era in global finance, and it's happening now. Whether you rise with this tide or get left behind depends on what you do in the next few days. Be strategic. Be alert, be ready. And above all, stay grounded in facts. The future is no longer on the horizon. It's here. Thanks for watching Iraqi Dinar Hub, your trusted source for breaking insights on the IQD, VND, and ZWL. If you found this video helpful, make sure to like, subscribe, and turn on notifications so you never miss a critical update. The financial world is shifting fast, and staying informed is your greatest advantage. Drop your thoughts or questions in the comments below. We read everyone. And remember, in times of quiet transition, those who prepare in silence often win the loudest. Until next time, stay sharp, stay ready, and stay connected to the truth.